Finance Committee meeting. I'm Councilor Green. I'm joined by Councilor Caldwell, Councilor Peniagua, Councilor Schultz, Councilor Hogan, Councilor Driscoll. Purpose of this meeting is really to go over some of the interrelationships between the fund accounting, particularly driving out of some of the questions that council members had for recent legislation. So it's a good opportunity, particularly with new councilors, to go over how it all works, particularly leading into budget season coming up soon. So I'll turn it over. I know you have a presentation. So why don't we let you go through it, and then we'll do questions at the end if that works best.
Sounds great. Thanks, Councilor Green. Good afternoon, councilors, and happy St. Patrick's Day. I apologize for the paper version of the presentation. We had some technical issues getting it up on the screen, so hopefully you can follow through. If I lose you at any point or you fall asleep, just kind of raise your hand and let me know. Like Councilor Green said, he invited us here to give a quick overview of the city's fund accounting. We are required by a couple of regulations to account for our activities in different funds, and so I'm just going to try to give you an overview of what that means, why we do it, specifically how we address it within our city, and then get into some of the details of the interaction between each of the funds. So for our agenda here, I'll introduce you to some of the finance team members if you haven't met them, finance and budget, give you an overview of the fund accounting requirements, let you generally know what the finance and budget department's responsibilities are with respect to this fund accounting, go over each of the city's funds. We'll try to do that quickly to not take up too much time with that. Talk about some of the interfund activities, how money transfers between the funds, and specifically I know there were some questions about cash capital. That's one of the largest interfund activities, so I'll try to give you a quick overview on how that works. So here today, I'm Brad O'Connor, the Commissioner of Finance from the Finance Department. We've also got Mike Cannizzaro, First Deputy Commissioner of Finance. Normally we'd have the Director of Accounting here with us. That position plays a major role in our fund accounting at the city. Mike recently vacated that position, and we have a new Director of Accounting starting March 28th, Kristen Bennett, who for obvious reasons can't be here today, and also from the Budget Department, Budget Director and Irish sweatshirt enthusiast Tim Rudd. So to give you an overview of the fund accounting requirements and really why we're here and why we have 26 pages in front of us, there are several different authoritative bodies that are requiring fund accounting, and what that means is we've got to separate all of our activities into distinct funds. So these separate operations through these requirements can't be commingled. When we do have payments that go between funds, we need specific authorization to do so, specifically from your group, the Common Council. So the rules governing fund accounting, they come from several different areas. City charter lays out some fund accounting rules. The state has both the local finance law and general municipal law that dictates when certain funds need to be used, how they need to be used. Overseeing all of that and bringing it together into one comprehensive set of rules is the U.S. Government Accounting Standards Board. So the Government Accounting Standards Board sets the rules, and then the city charter and New York state law kind of has some certain definitions on how things fit into that, or could fit into that those general accounting rules. There are three distinct fund classifications and that have been prescribed by the Government Standards Accounting Board. They are the governmental funds. So governmental funds are generally used to account for tax-supported governmental activities. Proprietary funds are business type funds. So, you think of water and sewer are business type enterprises. Those bring in revenues related to sale of some type of good or service. And then the last is fiduciary funds. So fiduciary funds, generally speaking, we are holding on to money on behalf of someone else. There are several different kinds of fiduciary funds. The largest activity that we have is with the school district and the county. We collect taxes on behalf of the school district and county. That's not our money. It can't come into our revenue. It can't come into our general fund. And so we account for those in fiduciary funds. And there are...
Can I interrupt you just for a second?
Yep.
Could you give a couple of examples of each one? Like governmental, proprietary,
Yep.
fiduciary, just so I could get like a sense of.
Yeah, so I've got in the next couple of pages, I kind of break it down into types in each of those, and then I'll go through each of our funds and kind of map them into each of those, if that works for you.
Yeah, absolutely. Sorry, I didn't know it was the next page.
Okay. So within these 3 fund classifications, there are 11 fund types, and the fund type dictates how we need to account for these funds. There are different accounting rules for each fund type, and so when you're looking at income statement or a balance sheet of a fund, each of them is going to look different, and to somebody that's not really familiar with these, it's going to look unusual. Something like the general fund doesn't have long-term assets or liabilities. So the general fund doesn't own this building. The general fund engages in most of the city's activities, but doesn't really own anything, doesn't really owe anything. Those are living on another fund. So each of these fund types has its own accounting requirements. Within governmental funds, and we've got each of these 5 funds, we've got general fund, special revenue funds, debt service funds, capital project funds, and permanent funds. And again, I'll get into the funds that we have specifically in a minute and kind of show you how we use each of these. Within proprietary funds, there are 2 types, the enterprise fund and internal service fund. And in fiduciary funds, 4 types of funds: pension funds, external investment funds, private purpose trusts, and custodial funds. Something like a pension fund, we don't have a pension fund. New York State has a pension fund that we pay into. Most municipalities don't. External investment trust is the same kind of thing. That would be if someone's giving us money to hold on to them to invest. That's not something that we do. So budget and finance department, there's a large set of rules. This is, why we've really got to beef up our budget and finance departments. This isn't, we've got to do more as a municipality than a typical entity, because we've got to make sure we're always following these rules for these 11 different types of funds. So the city charter and municipal law requires that we budget for each of these activities in separate funds. So in the next month or 2, we're going to meet with you on the budget of each of the departments and each of the funds. So you will see the details of how we budget for those funds. Under the charter, Commissioner of Finance is responsible for ensuring compliance with fund accounting requirements. That is a major part of the Director of Accounting's job. Takes a lot of work, takes a lot of knowledge of the rules, and so in addition to the accounting operations and making sure we're collecting the money and paying the bills, I am responsible for ensuring compliance with all of the rules, and we'll get our grade for that compliance once a year when our auditor issues our audit, which they typically present to you. Also, the Commissioner of Finance is, under City Charter, required to direct and manage the overall cash and liquidity strategy of the city. So I'm responsible for making sure each fund has enough cash, that we as a city have enough cash. If we don't have enough cash, that's when we go out to the market to borrow for either short-term or long-term needs. You might remember last summer we needed to borrow money on the capital fund from the general fund to pay for some advances on some of our large road projects that were ultimately reimbursed by New York State. So these are the kinds of things that the finance department is constantly monitoring to make sure, both on a macro level, micro level, short-term, long-term, we've got the cash that we need for today and the foreseeable future. And we had budget department, the budget director obviously plays a large part in that. You know, finance department largely looks at what we did yesterday. Budget department looks at what we're doing tomorrow. When we're looking at cash analysis, liquidity analysis, it's kind of a mix of both. It's important to know that we've got enough cash on each fund for what we're doing tomorrow. So, you know, the estimates from the budget department are important. I've got a listing of each of our 24 different funds that you can follow along with me here. As I talk about each of the funds, I identify the fund by the numbers that we use. So we number each of our funds 1 through 99. We only have 24. Just kind of how we're identifying them and talking about them from time to time, if you happen to hear those numbers. I've also put on each fund, just to give you an idea, the relevant size and activity of these funds to one another, the total assets and the total revenue for these funds. You'll see in parentheses there for the general fund, assets of 129 million, revenue of 244 million, to just give you an idea. So the general fund is our major fund for all of the recurring city services. We've got 46 different departments, with the largest activities being public safety, parks and DPW, and also administrative support services. Special grant funds, the Special Grants Fund is our second fund. That is a special revenue fund that accounts for operating type third-party grants. So these are the kinds of grants that aren't for capital. It's not for the road improvements, but something like a police operating support, you know, maintenance of the parks, the kinds of things that we can't capitalize when we get state and federal or even sometimes private funds for those. Those would have to go through the Special Grants Fund. Fund 3 is the Downtown Special Assessment Fund. This accounts for the taxes collected in the downtown district and spent on downtown operating expenses. This is another special revenue fund. The Aviation Fund, Fund 4, is an internal service fund. So this fund actually owns the airport. The Syracuse Regional Airport Authority operates the airport. We own the physical asset and we lease it to them. In the past, we had a department of city employees out at the airport helping operate the airport. That's dwindling, and right now, as of about a week ago, the only employees we have out there are the air crash rescue from the Syracuse Fire Department. So the operations themselves are dwindling, but we're always going to own that asset, so we'll always have this fund with assets. The revenue that you see here, so this is an average of the last 3 years, revenue of 31 million on the aviation fund. Most of that is a donation or a contribution of improvements to the airport. When the regional airport authority makes an improvement to the airport, that's actually an asset we own. They can't pull the sign off the front door and say, this is ours, you own the rest of the airport. We own the airport, we own the improvement. So a couple of years ago when they put $50 million into the airport, that was improving an asset that we own, and that becomes revenue for us. The water fund is an enterprise fund, a business type fund that accounts for the sale of water and related operations. Sewer fund, similar to the water fund, another enterprise fund. We rent the sewer, we rent the use of the sewer. And this fund accounts for that income and the expenses. Fund 7 is capital project fund. So this is similar to the special grants fund. This accounts for funds that come in from largely state and federal sources to fund large capital projects. Difference between the special grants fund is that these are all for long-term capital projects, and this also has the funding that comes from the general fund and the cash capital appropriation. Oil and flushing, another revenue fund. This is similar to Similar to the downtown district, this is taxes that are billed in each quadrant and used for oiling and sweeping activities.
Oiling means slurry seal, right, in the context for everyone?
Yes.
So.
Fund 10 is our trust and agency fund. So this is a custodial fund that temporarily holds funds that are collected on behalf of a third party. Largest activity here is the property taxes that we collect on behalf of the school district and county. Goes into Fund 10, gets paid out to the school district and county from Fund 10, doesn't hit any of our other funds. Also included here, there are 15 other withholding and deposit accounts. So something like, New York State with retirement withholding is withheld from my paycheck. That goes into this account until it's paid out to New York State. Someone doing a large construction project needs to put a deposit down for that work. It goes into this account and is held separate from our other activities. Fund 11 is the debt service fund. So a lot of these, aren't going to make a lot of sense if you look at them on their own. This is one of them. This just exists to meet those accounting requirements of the GASB. So it's largely a pass-through entity. The funds that don't have their own debt, including the general fund, will pay into this debt service fund, and then the debt payments come out of there. Fund 12 is the Municipal Sidewalk Program. So this was authorized by the council in last June. This past year it was funded by ARPA, so it really didn't have any activities this year. But starting in fiscal year 23, this will be a special revenue fund that will look similar to the oil and flushing fund. General long-term debt, again, several of the funds are prohibited from having long-term assets and liabilities. So this is where those long-term liabilities live, and that's largely bonds. We also have reserve for judgments and some long-term personnel costs, retirement costs, and things of that nature.
Do you not have a 13 because it's bad luck?
That's right. So we won't have 99 funds. If we do, we'll have to find another way to number them. Fixed assets, similar to the long-term debt fund. So this holds all of the assets of the general fund. The Krause-Marshall District, similar to the downtown district, this is a special revenue fund that accounts for taxes collected at the Krause-Marshall District and operating expenses related to that district. Then we have a number of, looks like 8 or so, expendable and unexpendable trusts. So these are third-party funded trusts that, either collected from state, federal, private sources, and that contribution came with some kind of restriction, either a temporary or permanent restriction. We've got to separate those funds. So these 8 funds are separate activities based on those individual contributions. Largely, these benefit public safety and parks department.
So would when a place such as Parkside Commons or some of those other places pays sums for STD, would that be one of those?
No, that's a reimbursement of their regular operations, so that would go into the general fund. This is more, say a maintenance of a park. So someone dies and leaves $100,000 and says, I really like the Rose Garden at Thorndon Park. Here's $100,000 to use for maintenance of the park. That would have to be separated into a separate fund here.
Is that also where the SU agreement monies go as well?
I don't think so, because those are in and out in a year. Yeah, so those are general fund.
In and out specifically according to the agreement, or?
Yeah, so those will be paid. Do you know how those?
It's like a non-property tax item, right? I mean, that's just the service.
Yeah.
Yeah, it's just a general fund revenue.
Yeah, those are in the general fund. I'm trying to think of how the expenditures, you're talking, because there's a split. There's $1 million of general revenue and $500,000 of neighborhood development. I'll have to look into how we separate that out.
Okay, that'd be good, because I know there was not a budget sheet per se in that agreement, other than just breaking down 1.2 the first year, and then it increased each year by 500, I think. So I just am curious, is that a wash? Does it come in and pay for every service, or do we have flexibility to use the money for whatever we want in the city?
Yeah. Yeah. Yes, but I think I understand your question. The agreement comes with some specific requirements, so I'll have to look into that. Fund 50 is neighborhood and business development. So this is another special revenue fund, largely accounting for HUD dollars. We get, about $17 million of funding from HUD to support neighborhood development initiatives. And then Fund 99 is our treasury fund. So rather than opening a bank account for each of our 26 funds, we are allowed to, and we do, have pooled cash that we allocate to each fund. So this is just an easier way to manage our bank accounts. And, through accounting entries, it gets allocated to each of the funds. So those are the 24 funds. So next we'll talk a bit about interfund activities, just monies that flow back and forth between each of the funds. Any activity between funds needs council approval. These are distinct funds, and the funds can't be commingled without your approval. So the first category I've got here is an estimate of reimbursed costs. So both the water fund and the sewer fund pay the general fund essentially a reimbursement of the costs of the general fund to support those two operating funds. So both water and sewer, they couldn't do what they do without the administrative support of IT, HR, finance, budget, the mayor's office. Also, engineering is heavily involved. So we estimate the value of all of that support that the general fund is giving the water and the sewer fund, and each year an amount is appropriated from the water and sewer fund to reimburse the general fund for those estimates. We also have some funds that reimburse the general fund for actual costs. Special grants, capital fund, NBD, and aviation fund, and these are largely support that's reimbursed by a grant. So engineering department is involved in a large project that's reimbursed by state or federal dollars. Under the terms of that contract with the New York State, internal costs can be reimbursed. So we will quantify those actual costs that are dedicated to each project by individuals on the general fund, and these other funds will reimburse the general fund for those costs. We've got a couple of entries that are really just accounting entries. Yeah, so right. So kind of acting like the special grants, NBD really is ARPA, and ARPA is just kind of a big special grant fund. So ARPA, we're going to have the same kind of thing. We've got individuals working for the general fund, either directly or indirectly, supporting all of the ARPA activities. That is a valid ARPA expense that we will be seeking reimbursement for. So you'll see something similar on ARPA. We have a couple that are accounting entries just to comply with these GASB requirements. The general fund pays the debt service fund, which pays our debt. Funds go into the capital fund and out of the capital fund on capital projects. Once a project is complete, that project moves over to the fixed asset fund. We mentioned the cash capital appropriation. I'll get into that in a little bit more detail in a minute. And also interfund loan. We talked about loaning money from the general fund to the capital fund. And hopefully this next section will talk a little bit more about why we do that, why we have to do that, and where we use those funds. So we'll get into a little more detail about the cash capital, how it's used, where it comes from. The Capital Projects Fund, Fund 7, doesn't have its own source of revenue independent of specific funding for projects. So there's no leftover balance in the Capital Projects Fund to do any work beyond things that are specifically funded by grants. So that's why we need to appropriate money from the general fund to the Capital Projects Fund for anything that's not funded otherwise. So the administration, through budget director, determines what our capital need is for any given year, and that amount is included in our annual budget as an appropriation from the general fund to the capital fund. And typically what that number is the accumulation of projects that we think we're going to complete. Usually the projects that we actually end up completing are pretty close to that. There are going to be changes. Some will be over or under budget. Some projects will get canceled or find other funding sources. But for the most part, what we bring to you to approve, the projects that we bring to you, are what was included in the capital fund, which is then what was appropriated from the general fund. So the money comes over from the general fund, even though it's based on a listing of projects. It comes over from the general fund into the capital fund as a pool of unallocated dollars. So when that budget is approved, the dollars move over to the capital fund. Then throughout the year, you will get requests to approve individual projects, and those individual projects will draw down on that cash balance that we transferred over from the general fund. All capital projects, regardless of their funding type, do need council approval. So we've got a couple of different ways to fund these projects: state and federal sources, rarely private sources, and then the two other sources are bonding and cash. So we, in the aggregate and on an individual basis, need to determine when we want to bond and when we want to use cash capital. And there's a couple of things that we consider when we're making that decision. The first is, does it qualify for bonding? If it doesn't qualify for bonding, it's not an option. We've got to use cash capital. And what would drive that are the type of expenditure and useful life of the expenditure. If the useful life of the asset is less than 5 years, we can't bond for it. So things like police cars, you'll always see those coming through as cash capital. Those, we typically can't keep them for 5 years because of the wear and tear on those cars, so we wouldn't bond for those. Type of asset, it's got to be a hard capital asset. Something like software, might not meet the useful life requirement, but probably also doesn't meet the type of expenditure requirement. If it does qualify,
Brad, but that's like a administrative decision. That's not sanctified or codified in any kind of accounting lexicon.
No, that's a requirement for both the.
But you make the decision whether it qualifies under.
Yeah, I will interpret the rules and make the decision, but there are specific rules of what's required for bonding that we've got to follow. And
Is that state protocol, Brad, or federal, or just city charter, or?
It's federal.
It's what?
Federal.
Federal.
Yeah.
What I was saying is what we decide to spend cash capital as opposed to bonding. You use the example of the police cars and all that. Not that I'm saying we should bond for police cars or anything, but that's sort of, you're making a determination that it's wiser to do the cash capital as far as it is. It's not, is it practice across all sorts of like fiduciary entities or what?
Yeah, it's a common practice, and there is some gray area that we've got to determine that we can't bond for something with a useful life of less than 5 years. That's a requirement. It is a judgment call as to whether a police car lasts more than 5 years.
Especially where
So yeah, there's some judgment in there on how we can interpret and apply the rules, but the rules are pretty black and white. So if we can bond, we've then got another decision to make if we should bond for it, and you know, this is less of a factor than whether or not we can bond. If we can, we're going to look at what kind of cash we have available, size of the expenditure. You know, if this is a $10,000 asset, you know, we're probably not going to bond. It's not worth the administrative hassle of bonding for a $10,000 asset. And then we're always going to look at the bond market indicators. We've got a internal debt service coverage ratio that we've got to be aware of, and those are things that we will usually look at, you know, on the aggregate, but we're going to track them on the individual basis on an ongoing basis too. So in addition to the specific projects that we're funding with cash capital, we've also got to use that pool of money to advance funds for projects that are going to be reimbursed. Most of these are state and federal sources. So when we asked for a $7 million loan from the general fund to the capital fund last summer, it was because we had an extra $5 million of state-funded road reconstruction work that we were going to get done. So that work, we've got to pay for the repair up front, and then we submit for reimbursement from New York State. Sometimes that reimbursement takes 90, 180 days. So this is cash that we are out until those funds are reimbursed from the state or federal source. So we can't do this anywhere other than the capital fund. So the cash has got to be in the capital fund to fund these. The other thing that we use this for is for bonded projects. So we could issue a bond in June and in August get approval for a project that's going to be bonded the following June. If we want to start that project before we get the money in June, we'll use this cash capital and then kind of reimburse the cash capital when the bond comes in the following June. So I'll try to walk you through kind of a high-level example of each of these funds and how they come in and how they come out. What I've got is a chart showing an example of the flow of funds for each of the 4 quarters, with the beginning balance and the ending balance. This is our cash capital balance in a hypothetical scenario here. So we've got $3,000 at the beginning of the year. We've appropriated $5,000 from the budget. That goes into the capital fund, adds to that $3,000. So now we've got $8,000 to work with. This orange section here is the assignment of those appropriated dollars to specific projects. So Project X, we assigned $1,250. And also this red section down at the bottom, this is the advance on, road reconstruction and other federally and state funded sources. So we also spent $4,000 on those that we're going to get reimbursed in the future. That left us with an end balance at the end of that quarter of $2,750. So you can see how as we assign that cash capital to a project, that reduces our balance. As we spend, again in that red section, as we spend more on these large road projects, that reduces it. And then also in red, reimbursement of $2,000 and $4,000. That's when we're repaid by the state or feds. So that replenishes our balance. So we're always going below what we have appropriated to advance funds on some of these larger projects. The green section there is representing bonded projects. So a $500 and $2,000 project that were started in Q2 and Q3. We issued a bond in June for $2,500 to reimburse those. So the green and the red, typically every year, every fiscal year, it's going to fluctuate up and down, but they will wash out to zero. And it's really the blue and orange where we're going to see any net change in the cash capital balances.
What's our bonding capacity?
You know, there's I guess, kind of technical answer to that. You know, when I get approved for a mortgage for $800,000, I know I can't afford that, but the bank is going to say, technically, here's what the numbers say. So it's kind of the same with the city bonding. We, you know, I can get you the exact number, but I think we've got about $180 million available in our debt coverage ratio. It's not something we should spend. That's just something that technically we're allowed to borrow, but it would not be prudent to borrow that much.
You're around 30%.
30% available?
I think we're 30%. Like
We've used 30%?
30%.
Yeah, that might be right.
So then what is it that we're allowed to borrow?
We can borrow up to that 180 million.
Up to,
Yeah.
okay.
Yeah, without penalty. You know, but then we look at what would be prudent to borrow and what the city could afford in the future. If we borrow 180 million, it very quickly gets us to the point where our future general fund budget can't afford the debt service cost. So that's going to be a larger barrier than the technical limit. Anyone else have any other questions?
There is a sheet in the budget book that shows the constitutional, well, our debt limit and the calculation behind it. I think it has to do with like a 5-year average of the assessed value, and you're allowed to go up to some fraction of that. So it's definitely in the book each year, but we've had much higher use of our constitutional debt limit in earlier years. So 20 years ago, we were using 75% of it, and now we're using 30%, something like that.
And there is a conversation between the operating departments and your departments regarding like the capacity to use that bonding. That's sort of what I'm a little concerned about, is that you bond for a project and then we don't have the capacity using our people in order to complete the project.
You're saying the internal capacity to
Yeah, I'm just saying,
execute the
is there any
project?
kind of conversation between you and the operating department saying, geez, you really want us to bond for this road reconstruction when we only got maybe an engineer assigned to it or something like that?
That's not really something the finance department gets into.
Who does that for the?
That would be the operating departments.
I mean, is there any kind of, I mean, you know what I'm saying?
Yeah. You know, the engineering department,
I'm
right, the engineering department is monitoring all of their projects, and I'd imagine if a large project comes in, they're gonna assess their ability to complete that project. You know, in the 2.5 years I've been here, it hasn't been an issue. That hasn't come up. I think if we got a $25 million project coming through, it would probably be a different conversation. But the activity has been consistent enough that I haven't, you know, been concerned enough to raise a flag.
In relation to the ARPA one, have we, in the beginning, we heard all sorts of different restrictions on it, and then some of those restrictions went away, and then we got new restrictions. Are we sort of settled on how we can use this money? As far as there's no more things coming down the pipe about?
Not that we know of. The Treasury issued their final rule in January, and we're considering that final.
And there was also talk about sort of putting all the grants together. I know some departments had trouble spending their grants. Has that been done?
I'm not sure. I'm not aware of that.
Because I know that was an issue before, particularly in the Parks Department. No, I'm talking about grants.
Yeah, I'm not familiar with that.
So question, you had said earlier that some projects are underfunded, some are overfunded. So is that where you're pulling some of that allocated unspent monies to fund future things that come before the council that we have to vote on?
So the pool, the appropriated unallocated pool, will fluctuate up and down based on those differences. A project that's over budget would need to come back to council and have additional cash capital allocated. So we can't use that as a slush fund to fund unapproved projects. Really what it is a balance that fluctuates. It's not always going to be what we expect it to be because of the short-term funding and reimbursement and the long-term differences in the projects.
So when we have the allocated and unallocated, I guess I don't understand how to really ask this question, but when the council's asked to approve using those monies, but we don't know exactly where they're coming from. Is that me?
I don't know.
That's how councilors speak. Yes.
Okay. So can we ask for that detail of where the money is you're kind of borrowing for the time being until something gets, I found it. It's taped. It's a wire that's taped. Thanks for setting me up, people.
So you're asking for, I guess I don't understand the question.
So Timrod, you know, right?
Can I try to, because let's just play school. Brad's the teacher. We're all going to learn. So I think we have to have at least one other person who can explain slide 25. So I know when I read the presentation, I was like, I'm with everything, and I got to slide 25, and I was like, whoa, hold on, this is the part where gets a little wild. So the moment of brevity to give our brains all a break. Brad and I were both going to dress the same, but Brad couldn't find his green hoodie, and I couldn't find my blue blazer, so it ends up looking like one of us went to CBA and one of us went to Henniger. But, okay, so we have this cash problem. Not problem, but so if you look at the top, you've got the beginning balance. So I kind of go, okay, there's $3,000 that we began with. So I guess somebody could say, well, where did that money come from? And I guess it came from like previous years of accumulations, right?
160 years of accumulation.
160 years of accumulation. So one thing with that number is 3 years ago, that number was pretty big because of the legacy of all this stuff. Yeah. And then COVID happened, and we actually sort of rated that number. So that starting number decreased. So 3 years ago, there was sort of more flexibility for all this. And then he's describing these kind of like programs that you have to prepay that you eventually get reimbursed. So in the same time, the main thing we get like that is road reconstruction. So we're paying and then eventually we get reimbursed. And thankfully the state has been doing more of that. So at the same time as we reduce that initial amount of money sitting in the fund, we also have decided that we have to upfront way more money. So we have this challenge to deal with. Fair enough to start? So he's showing, so you see the top, and then at the bottom, he's showing you the balance at every quarter, right? So you as the council, I'm coming to you, I'm saying we're gonna spend $5,000, right? And this fund already has $3,000, but this year we're gonna spend $5,000. So when you look at what our balance is in the fund at different points in the year, it changes. It's not always $3,000, right? So the first quarter, it's $2,750. The second quarter, it's $1,000, then it's $500, then it pops back up because we've eventually gotten reimbursed. So in the end, it balances, but in the near term, we dip below. So that's kind of like my takeaway from this. And I think that's kind of one of the challenges. We have to have that pot of money that we're using to pay for things that eventually we get reimbursed. And in the end, the money's still gonna be there. But there are going to be these periods where we're not going to have that money. And I think the question is always like, well, where did that $3,000 come from? And so I guess that's where Brad has to make sure, as CFO with the broad powers to manage these accounts, that we can kind of survive these waves. Because he could have, I think, done a situation where instead of going to 500, something hit earlier where the state delayed their repayment, and in theory it could go negative, and it's Brad's job to move things around so that it doesn't go negative. And I think that most of those actions occur, for the most part, without anybody else seeing, unless something goes terribly wrong. But as long as Brad's doing his job, which he does really well, then we only go to 500. And in the end, we have the 3,000 back to do this whole thing all over again. And so to the extent there's 3,000 there and we have a $5,000 budget, that may be easier to manage than if you have, I don't know, 1 million beginning balance and 20 million of projects, right? If you're managing way more in money than you have initial balance, then this time flow exercise becomes a little more complicated. But with that, I would just ask more questions.
So just simply, when you're, Brad, doing your magic with your wand and pulling from Peter and Paul and doing all that, do we ever get the specifics, like account number 47132, we're gonna pull the $5,000 for now, and then we come back and say, now we reimburse that account number that we borrowed from? Or is that something that we're not allowed to comment on?
You're certainly allowed to. It is something that we spend hundreds of hours on a regular basis, and it very quickly gets into the weeds when you're talking about advancing on 350 projects, and literally, you know, this $3,000 we start with is the accumulation of 160 years. So that's not something we'd be able to say, I know where this came from. We can tell you, I know what I added to this last year. I know why this went down last year. Are you talking about the green and red sections here where we're advancing on projects?
Yeah, it was the last, and I don't have my book with me, but when the first I saw that allocated unspent funds, and I asked where it's allocated, and
So I think we've done this phrase of authorized, which is my attempt at communicating that we're not spending anything that you haven't given permission on. So authorized, council authorization.
Right.
Unallocated. So I would say the money we're talking about is, in this case, the $3,000 that's there to start. It's kind of like the beginning balance. And so in the end, when we spend and we get reimbursed, it should be about that same amount as long as we get reimbursed.
But again, we won't know specifically where it's coming from for the moment.
Where the 3,000 comes from?
Yeah.
I mean, it's sitting there in the account. It's just, it accumulated over a long period of time. I mean, it could also accumulate instantly if we took $5 million and moved it from the general fund to the cash capital fund, which we may decide to try to do.
Let me try to interpret this, and you can tell me if I'm wrong or not, but so sometimes it's been explained to me incorrectly that the way the capital budget works is, like, if you look at the orange period here where it's Project X, like, the capital budget does not say Project X is approved for 1,250, Project Y is approved for 1,250, Project Z is approved for 2,500. It says we have $5,000 to spend this year for every project, right? So if this were to happen in this year where Project X only was 1,000, Project Y was only 1,000, Project Z was only 2,000, now we have $1,000 left over out of that 5,000, and they could come to us and say, hey, council, there's 1,000 left over, we want to do this new project that we hadn't planned on using before, and the council can say yes or no, and that's what the unallocated capital essentially is that?
That's right, yeah, and so if you say, yes, that's a great project, spend $1,000, at the end of the year, our balance is $3,000. If you say, I don't really like that, and we don't come up with a better alternative, we've just added $1,000 back to the cash capital pool.
What about allocated unspent? Oh, sorry, go ahead.
Yeah, go ahead. You got to go up to the mic, though. So.
First time I've been up here. So I totally get that, Brad and Tim or Corkman and whoever, you know. Yeah, but what Councilor Schultz is asking and myself is asking is that of what Michael just said, that fund that is coming out of, why can't we get provided an account? If that is an account, why shouldn't that account be attached to the unallocated amounts? And when we're doing special projects, I think Director Rudner on more of what I'm talking about, because we have had several conversations about it on different projects that came through with no account attached to it at all. It's just unallocated, and we're pulling it from, you know, these years, hundreds of years. And, you know, if I'm not mistaken, city charter, we require an account. So that's where I'm stuck at, you know.
I think I understand. So this is a request to allocate from unallocated cash capital. And
So I think, hang on, I'm gonna try. So cash capital. So in this, cash capital is fund what number? I don't have it all memorized. What fund, do you have it memorized? What fund is cash capital? 7? So it goes to Fund 7, but we pay for a lot of stuff out of Fund 7. And there's times, I'm 100% not going to talk if he's not listening because I want him to be able to correct me. So one, there's the account structures that you think of for the general fund, right? So there's we're kind of using the word fund at a high level right now. So there's funds, and then there's a whole nother like accounting structure with levels of detail. So the general fund, like every dollar it's in the general fund, and then it goes to police, uniform, salaries. So it has like a whole number code. It's like a budget line. And then in the capital fund, so the general fund works that way, right? Everybody kind of gets that because that's what we're used to looking at. But then the capital fund is really project driven, right? So the part to me where I went, oh, reading this presentation, that's useful, is when the page where it says we move cash capital as one giant allocation into the capital fund. So that when we do bonds, again, correct me if I'm wrong, but when we do a bond, we're saying project A to redo Clinton Street to make it, or I don't know, something. Project A, we're going to bond for, and we can only use that money. So bonding, we only go to bond once a year in June. So we go to the market, we say we have project A, we would like $1 million for project A. They say, tell us about project A. We say, it's for this asset, it's gonna last this long, it's gonna cost this much money. They say, okay, you can do that. So that goes in, and I would say that money is tied to that project, and we can't really use it for anything else. But the bonding is different than the cash capital. So we know we're gonna spend a bunch of money on like police cars and computers and things that don't last more than 5 years. So that money gets moved all at once. So to the extent we don't spend that, it's sort of like loose change that we can use. So to the extent that builds up over time, we can use it in this way. And if we didn't have the money, then we would need to issue like a RAN, or like a shorter term debt instrument that we would have to deposit into the account in order to make it so we didn't dip below 0. So I think having that pot of money that's accumulated over time or that's been directly placed there helps us avoid borrowing money, like they're short term, to borrow short term. I mean, it's like, it's in this fund, but it's not actually a project. There's no project because every year we put $3.5 million or $5 million that's untied to anything.
Okay, now I was deputy before I was clerk. Okay, when prior to you coming in, Brad, you guys, whenever there was a project request, similar to what we're talking about here, there always was a number attached, a number that was attached to the project. Always, very seldomly, there were not a account number. And that's what I'm asking for. I'm asking for, can we have that account number up on me, putting it on the agenda, putting it in front of the council to vote on so they can know exactly where the money is coming from. But what are you saying, that it's not money? Because I think you explained it to me once before that it's like really not money. Oh, okay, it's really not, it's a project or something that was not completed and you're using that.
So imagine the police cars, we got $3 million worth of police cars, but like Mike did the example using ours where he made it so we saved 1,000 rolls forward. So with police cars, if...
I guess, can we, just to try to get her question, are there different within the capital, are there different accounts that are allocated for certain projects?
No, and I think that's probably the difference here. You know, on the general fund, we've got 300 different accounts, and when we spend against the general fund, we're spending against these budgeted accounts. the accounting requirements for the capital fund is different. You know, we've got revenue that comes in as, you know, two different revenue line items. Everything on the capital fund is expensed as capital expenditure. So you'll see one line, capital expenditure, $30 million.
So, but in previous, I think what the clerk is talking about, in previous times, we used to bond for certain items, and that would have a specific account number. Is that?
No. If we bond, we don't need the account number. This is, these are actual projects that cash capital is coming out of cash capital. The administration is submitting, request for legislation for cash capital with no account attached to it. And it's not on the CIP form as cash capital. It's, more at the bottom with other, and it just have appropriated or not allocated on some of them. And that's the part that I'm very uncomfortable about, because that's new. And Counselor Bud, Director Rudd, you and I have had a very intense conversation about this, and this is where I'm at.
It might help if you could show me an example of what you mean. You know,
I think Director Rudd can, because you guys sign these CIP forms, so you guys, I get them after you guys sign them. So I think that they're right.
well, you're saying it was done different though before us.
With Mary, Director Rudd can help you with that.
I don't know how to explain it, but Auditor Maroon, do you have a comment to clarify the question? Because I know you also have concerns about this approach. I know the example.
If I understand the clerk correctly, and what I think Councilor Schultz was referring to as well, and as Brad just mentioned 10 seconds ago, the difference being here is that in the book, when the council is given the book, there are items now where the Commissioner of Finance has a sentence at the end that says that it be designated basically at his discretion. And I think that's part of the problem, that was never the case before. And this, if I heard Councilor Schultz's interpretation, or question rather, excuse me, was she's asking for, I believe, the unallocated cash capital. And right, and that's what I was just going to say, and that's the same that I think the clerk is asking for. You're asking for the account identification and the actual monies there, and the clerk is asking for the same thing. Historically, those were identified when they came to the council. Those were identified, and I know you were saying that.
So, yeah, we can add an account for cash capital. I mean, it would probably just say capital expenditures on Fund 7. Not sure if that would help, and yeah, we can do that. And I think there have definitely been cases, many cases recently where we haven't listed an account number. And I think that's in part because we're involved in these activities that we're learning as we're going along. So the sidewalk legislation, we wanted to start building sidewalks last summer. This is a new activity. It's a new fund. There were still some legal requirements we had to figure out. We needed some interpretations from our CPAs to tell us where these things should go. So we didn't have some of those answers. Same thing with ARPA. We were working on an interim rule. We didn't know where these things were going to end up. We didn't know what account they were going to end up in. So there are some times where there are some technical questions that we have that can't be answered before the legislation. In those cases, it's a to be determined in the future. Like anything, we've got to follow the accounting rules. We can't legislate the accounting. We've got to follow the rules. So sometimes we've got it before the legislation. Sometimes we don't.
Let me just add, I'm sure you all know this, but as counselors, you have the oversight, responsibility, and authority to ask for whatever is that you want. And because the Commissioner of Finance doesn't have that information, It's not necessarily he's trying to hide it from you, but as he just explained, there may be some technical reasons in terms of how they interpret the guidelines that they have to follow. But you have the right to hold that legislation and get the information that you want before they proceed. So just don't feel like, and I know Brad, the commissioner's not saying that to you, but don't feel that way. You have every right, and that's your fiduciary responsibility as counselors, is to look at that, look at the specifics and get those before you cast your vote. And the clerk is simply asking you to do that. If I understand her correctly, that's what's going on.
So one thing, as a former counselor and wanting some sense of control over the expenses, right? You set the budget, you tell them where the money goes in. So a part of that, I can understand how when it reads to be put in an account chosen by the Commissioner of Finance, it sounds like we just gave $30,000 for jujitsu training for the police, and it's going to go into account to be determined appropriate by the Commissioner of Finance, and you all go, oh, Brad might put it in the Ultimate Frisbee account because Brad loves Ultimate Frisbee. But I don't think it's actually that way at all. I mean, he's going to put it wherever it can pay for jujitsu, and some of that is going to, we kind of figure it out as it's going. And he has, I think he needs the ability to be able to move the money where it's appropriate to be paid. So, and then I get on the capital side, if you give money to Project A, you don't want it to go to Project B. But I also don't think that this approach is at all, like when you look at this, what's happening, I guess it almost should start with a budget appropriation with XYZ, and the budget appropriation is $1,250 for each of those projects, because he may have discretion to do it how he wants, but that doesn't mean he's not going to do what it says, if that makes any sense.
And I just got one point, and then I think Mike might have some clarity that the rest of us can't find here. The account number that goes on the legislation, that's an accounting requirement. So I'm identifying where we are required to account for this. It's not anything more. It's not giving me authority to spend it or not spend it. You know, the legislation itself tells me how we can spend it. The account number is just me identifying to you, when you look at our financials, this is where it's going to end up. So whether it's identified or not, it's got to end up where it's legally required to end up. And in most cases, we have that identified before the legislation, but in some cases, it's not until after. But it doesn't give us any authority to do anything with that money other than what was approved.
So is part of that if we were, because sometimes it changes, right? You learn something about it, we decide it should go in a slightly different account. So if it was specified, then that creates the kind of thing where we come back and we have to readjust the legislation, which may be what you want, but then that creates a lot of items and things that may not actually be substantive. But so there is a trade-off in that terms of like empowering the administrator versus not. You feel, I'm not, okay, you're.
So you took the advantage when Brad gave you opportunity to step in. But no, I'm just saying that basically that if you guys are requesting money to come from somewhere or a project to be paid by something, and we always need where the money is coming from. That's what we need. That's what I need to put in front of them, where the money is coming from. I don't want to constantly have put in front of my council to approve items that don't have an account of where it's coming from, and so if it don't have it, I would prefer to wait until we have that number, if it's possible.
Can we just all agree to try to be as transparent as, just so the public knows, so when we vote, just so we're all comfortable with it, I think we can.
Yeah, absolutely. And when we've got the account, I think we try to.
I don't
include
think
it
anybody's
anytime.
hiding anything or anything like that, but I just so obviously the public reads all our agenda.
Absolutely. And if we don't have the account number, I'm happy to discuss why and happy to discuss, what that means.
Do we also always just have the reserve balance to balance out if we overspend or don't have enough money at the end of the year?
We don't. We need council approval for that. We have approval to spend up to our budgeted expenditures.
All right, Commissioner, appreciate it. We'll call it. Thank you.
Thank you.
Oh, so you said reach out to that department for the sidewalks, right?
And I don't know.